Have you noticed your local bank or business closing down? You're not the only one. Join us as we explore the reason behind this global phenomenon and its impacts on customers, employees, and communities. Welcome to our video on why banks and businesses are closing more branches than ever before. In recent years, there's been a surge in bank and business branch closures in various countries, including the U.S. The pandemic has further accelerated the trend due to social distancing measures and the increasing popularity of digital channels. In 2020, U.S. banks closed more branches than they opened, leading to the highest annual net loss since 2015. Similarly, U.S. retailers also experienced a net loss of 5,437 stores in 2020, the highest since 2019. The branch closure trend is not exclusive to the U.S., as it's observed in other regions as well. However, the pace of branch closures in the U.S. reached a record high in 2020 and 2021, with a net loss of over 2,000 branches each year. Fortunately, the trend moderated in 2020 and 2023, with some banks hitting their practical limit and others opening new branches in strategic locations. In 2024, the net branch closure in the U.S. are expected to decrease further. The U.K. has also experienced a significant number of bank and building society closures since January 2015. The reason for the closure includes the rise in online banking, the impact of the pandemic, the cost of maintaining physical locations, and consumer preferences. The branch closure has implications for the availability and access to banking services, especially for vulnerable customers, small businesses, and rural communities. The decision of banks and businesses to close their branches is influenced by a variety of drivers and factors that can be broadly categorized into two main groups: supply side and demand side. On the supply side, the cost and benefits of operating and maintaining branches are the primary drivers and factors. These include profitability, efficiency, and strategy. Branches are expensive to run and maintain, requiring physical space, equipment, utilities, security, and staff. However, they face increasing competition from other channels and providers, such as online and mobile banking, fintech, and e-commerce, which can offer lower fees, higher interest rates, and more convenience and choice to customers. As a result, branches may not generate enough revenue or profit to justify their existence, especially if they have low customer traffic or transactions, or if they're located in areas with high rents or taxes. Branches face various challenges that can hinder their efficiency and effectiveness. Regulatory compliance requirements such as anti-money laundering, consumer protection, and data privacy can add to the complexity and burden of branch operations. Additionally, branches must adapt and innovate to changing customer needs and expectations, which can be costly and resource-intensive. Outdated or incompatible systems and processes and a lack of necessary skills or capabilities can further impede efficient operations. Finally, overall bank and business strategy can lead to branch closures, consolidation, rationalization, reconfiguration, or redesign. On the demand side, the preferences and behaviors of customers are the primary drivers and factors. These include convenience, choice, and experience. Customers value convenience, which means having easy and fast access to the products or services they need or want at a time and place they choose. Branches may not be able to offer the same level of convenience as other channels or providers, especially if they have limited or inconvenient hours, locations, or options. Therefore, customers may opt for other channels or providers, such as online and mobile banking, fintech, and e-commerce, which can offer 24/7 availability, global reach, and multiple features and functions. Customers highly value having a wide range of products or services to choose from that cater to their specific needs, preferences, and budget. However, traditional banking branches may not have the same level of flexibility and variety as other channels or providers, especially if they offer limited or standardized products or services or have high and fixed fees or rates. Consequently, customers may opt for other channels, such as online and mobile banking, fintech, and e-commerce that offer more options and customizations. Moreover, customers appreciate having a positive and satisfying experience when using or buying products or services, as well as interacting with the people or entities that provide them. Unfortunately, traditional banking branches may not provide the same level of experience as other channels or providers, especially if they have poor quality service or support or low customer satisfaction or loyalty. Consequently, customers may prefer other channels such as online and mobile banking, fintech, and e-commerce that provide better quality, service, support, and customer satisfaction or loyalty. Banks and business branches closures have a significant impact on various aspects of the banking and business sectors. These closures offer both benefits and costs to the banks and businesses, the customers, employees, and communities affected by them. On the positive side, the closure of bank and business branches can help banks and businesses lower operational and maintenance costs, increase profitability, and improve overall efficiency. Such closures enable banks and businesses to concentrate more on their core or strategic markets, products, or services. Additionally, for customers, bank and business branch closures can offer more convenience, choice, and experience through other channels or provide, such as online, mobile banking, fintech, and e-commerce. This can provide them with 24/7 availability, a global reach, and multiple features and functions to make their banking experience more convenient and enjoyable. The closure of bank and business branches can also benefit employees by providing them with more opportunities and incentives to upgrade their skills and capabilities, work remotely or flexible, or switch to other roles or sectors, which can enhance their productivity and satisfaction. However, while bank and business branch closures can offer significant benefits, they can also come with a significant cost. The closure of banks and businesses can lead to a loss of market share and customer loyalty and retention. This, in turn, can result in increased competition and regulation from other channels or providers, such as online and mobile banking, fintech, and e-commerce. These channels may offer customers lower fees, higher interest rates, and more convenience and choice. The closure of bank and business branches can also limit customer options and support, reduce their security and privacy, and undermine their access and trust. This is because branches provide physical and personal interaction, local and tailored service, and human and professional advice. Moreover, the closure of bank and business branches can also cost employees by reducing their job security and benefits, affecting their morale and well-being, and causing them stress and hardship as they may face unemployment, underemployment, or relocation. Therefore, banks and businesses need to carefully consider the cost and benefits of closing branches and ensure that they have effective strategies in place to mitigate the negative impacts on their customers and employees. The closures of banks and business branches doesn't have to be inevitable or irreversible. Some alternatives and solutions can help prevent to mitigate the closures, or at least make them more palatable for all stakeholders involved. Some of the alternatives include transformation, diversification, and collaboration. Transformation involves redesigning the branches to offer new and different products and services that cater to changing customer needs and expectations. Diversification involves expanding the range of products and services to cater to different customer segments and niches. Collaboration involves partnering with other banks, businesses, or entities to complement or supplement products and services, as well as to share the costs or risks of operating and maintaining the branches. When facing bank or business branch closures, there are various solutions to manage or mitigate the impact. Communication is crucial, with timely and transparent communication being essential for customers, employees, and communities. Compensation is also important, ensuring that everyone affected is fairly and generously compensated. Additionally, innovation can help leverage the closure to foster development and growth, providing resources and opportunities for learning and feedback. By adopting these solutions, closures can be avoided or mitigated. Bank and business closures are likely to continue or increase in the near or long term. This is due to factors such as profitability, efficiency, strategy, convenience, choice, and experience. These factors are expected to intensify, especially in the post-pandemic era. Digital and online channels and providers such as online and mobile banking, fintech, and e-commerce are expected to grow or dominate. Physical and personal channels and providers such as bank and business branches are expected to decline or disappear. However, bank and business closures are not inevitable or irreversible. Some alternatives and solutions can prevent to mitigate them, at least make them more acceptable and beneficial for all stakeholders involved. Transformation, diversification, collaboration, communication, compensation, and innovation are some of the ways that can maintain or enhance the viability and value of the branches. Additionally, they can address or alleviate the cost or impacts of the closure. They can also maximize or optimize the benefits or opportunities of the closure. Therefore, a comprehensive and balanced approach is necessary. Banks and businesses, customers and employees, and communities, as well as the society and economy in the short and long term. And that's it for this video. We hope you enjoyed watching it and learned something new. Hey, if you did, please give the video a thumbs up and share it with your friends. Also, don't forget to subscribe to our channel and hit the bell icon to get notified of our future videos. We have more amazing videos coming up, so stay tuned. Thanks for watching, and we'll see you next time.